Hello guys and girls, welcome to episode 9 as we dive into psychology. This is one of my favorite, and I'm sure it is for a lot of you traders, as after all, psychology is the biggest thing within the trading space. Now, it doesn't mean that we undervalue a technical analysis, because we still need to understand a high level of technical analysis, but they have to be congruent with each other. And what I've found with psychology is that you still have to work on your technicals, because once your technicals are up to a very, very high standard, it makes the psychology part a lot easier. And in this episode, we're going to dive deep into all of the key components, go over the chart work where you can see things like fear, see things like greed, and how you can avoid those pitfalls and make sure you're setting yourself up for success and dealing with those emotional issues that most people feel. Guys and girls, I'm very, very excited to get into it. Let's dive into psychology. Right, guys and girls, so we're now at episode 9 with psychology. So psychology is so important with trading. It's the biggest thing. You can learn the technicals relatively fast, but it's that psychological aspect that you're going to be learning on a weekly basis, which is why you cannot just take one course and expect to understand the psychology. It's the weekly stuff in the moment, which is what helps build on that. So what I'm going to do is take you through the key concepts of psychology. We're going to get into some chart work as well as we break down that psychological things in the market, so you can see where the fear, where the greed is, fear of missing out, all of these things. And then we're going to finish with a few other things and some really, really practical steps. Psychology is such a key component, and I'm very, very excited for you to absorb this content in this episode. So first up, let's take a look at remaining neutral. Remaining neutral is one of the most important things, and it happens by understanding the concepts that we've outlined, things like the probable versus the possible. The art of being neutral in the markets is a skill set that you will develop over time and experience. We as humans beings, we are emotional. The goal within trading is not to completely remove emotion, but rather learn the best ways to manage it and just reduce it. Being neutral is something that you must master in order to become a successful trader. Being overreactive to the result of a trade, whether it's a winner or a loser, is detrimental to your edge. It alters your decision making and keeps you from executing the strategy. When you're overly happy when you win, or you're overly sad when you lose, you don't really have much balance. So you want to move into more of that neutral state. What about hesitation? Where does that come from? Well, after taking a loss, hesitation is one of the main emotions that most traders will experience. When working with probabilities, rather than any form of certainty, hesitation is present, because you will never know with certainty if a position will play out within your favor, which is why we focus on probabilities. The books mentioned previously, as well as daily rituals such as affirmations and goal-setting techniques that we provided you with, play an important role in keeping your mental game strong so you can build your trading skill to the highest potential. Trading in the Zone by Mark Douglas is particularly important read as you become a successful trader. For understanding the mental emotional side of trading is very, very crucial. I would read this book as many times as possible. It is mindset mastery that shall remain a priority for you as you progress towards becoming a consistently and profitable trader. The main focus through Falcon is to develop your technical skill and back it with that confidence and resources to aid you in a step-by-step process in getting there. Remembering, when you read something, you're at a different level of consciousness as you learn more. So you may read Trading in the Zone once, revisit it 3 months later. You've developed, you've grown as a person. When you read it again, you're at a different level of understanding, which you're always going to take away these new key nuggets from that. That's why with content, we do the same thing. It's how we absorb and grow. Now let's take a look at greed and fear. This plays a huge, huge part in trading. As mentioned before, the emotions people experience in their trading is one of the main reasons why traders do not succeed and sometimes give up in its entirety. Fear and greed play into vicious games of back and forth, creating waves that really just disrupt your progression. The term FOMO is a popular phrase tossed around in the trading world and refers to the fear of missing out. We disregard this phrase and label it as not being prepared and properly educated. With Falcon, you have all of the resources you need to ensure you are prepared and you won't have to worry about this fear. After all, what is fear? False evidence appearing real. FOMO really just comes down to a lack of clarity, and it doesn't exist within Falcon when you truly understand the concept. Greed is also a very important emotion to avoid in trading. By sticking to risk management principles, and a set strategy that plays out over time. We remove the intrigue to risk higher percentages of our accounts, and we remove ourselves from the majority who trade the FX market, which place trades based off of how they feel, or they feel greedy, they feel like they want to make more money, so they risk more. Greed and fear play a big role, and it's important that we understand this so we can reduce it as much as possible. Now I want to get into the psychology part. We know the old saying is, 90-10, 90% psychology, 10% technical, and that be true. But it's important to understand that you still need to be a great technical trader so that can be congruent with your mindset. Common phrase that we know within the trading world, as I said, 90% psychology and 10% technicals. This is an important concept to grasp, as your psychology and beliefs about trading ultimately determine your level of success within the markets. I've seen some very, very talented traders technically, but they just fail to work on their mindset, and they think it's the strategy when really it's themselves that are holding themselves back. But it takes self-awareness to realize that. As a community, our goal is to keep each other accountable for our progress and for the goals that we set. This helps us to think clearly, and we move together steadily as a community. Not all trades are going to be winners, regardless of how much you tweak and refine your strategy. Understand the probability that we work with all of our full-time traders is the most important thing. If you can shift your focus to adhering to the strategy rather than focusing on winning or making money, then you're on the right track already. Now a little bit more detail with psychology. Many new traders find themselves in situations where they essentially have lost a significant investment into education with the wrong companies and mentors. This is where analyzing your mindset coming into Falcon is so important, because in order for you to succeed and implement the strategy to its full of effectiveness, you have to be certain in your belief that trading can work and will work for you. If you go in with a skeptical mindset that I'm going to dabble and it might work, then it most certainly won't work. You need to go in with a fresh, clean slate. Know that Falcon exists for this reason, providing you with the resources to surround yourself with people who are doing this full time, with those going through the same process that you're currently going through. This is why on a regular basis, 6 and 7-figure traders are coming out of Falcon. Why is that? Because you have the tools and the resources. The moment that you think you don't is when you're making excuses, and this is what people tend to do. They think, if I know a little bit more about the markets, then I'll be successful, when really it's always right under your nose. It's just about how resourceful are you with the current content that you do have. Surrounding yourself with the right people is one of the most important steps that you can take to ensure your progression as a trader and developing your mindset. Negative beliefs and comments are only that way if the way that you perceive them that way. By letting them go and pass without directing any energy towards them, you can move into the right direction and free up that time to focus on your goals with trading. Remember, it's not just about trading. Psychology is key in business and life in general, and it's important that you get your mind into the right frame. And when you're around the right people, they help you do that, and you have an incredible community for that. Now let's move into expectations. So expectations is very key when it comes to psychology. Expectations can often get the best of new traders. People become so focused on the quick return, the overnight success, without realizing the work that needs to go in up front to achieve that. If you hadn't realized already at Falcon, we focus on the long term and avoid this kind of short-term thinking. Short-term thinking gets you short-term results. Long-term thinking gets you long-term results. Your focus should be on producing compound monthly returns that allows you to replace your income and focus on the things that you're truly passionate about. We are big on visualization and manifestation. Don't set goals on how much you'll make or how quickly it will happen. Focus purely on self-development and growing as a person, and your skill set and results will shine through as a side effect of doing that. Now let's take a look at the inner circle. So what is the inner circle? Well, firstly, you need to take a second and a third look at who you hang around with. Who gives you advice? Who teaches you? Who are your friends? What is your family like? This is, if not the most important shift that you will make on your journey to financial independence. It is a common saying that you'll become like the 5 people you spend the most time with. You begin to reflect traits, language, behavior that is influenced by the people that you hang around with the most, and essentially you become those people. By filtering your circle of influence, you will undergo breakthroughs that many people before have experienced. You will uncover the ability to see the world more clearly without limiting beliefs or inflected in limitations that people just put on you. So surrounding yourself with the right people is one of the biggest things that you can do to grow as not just a trader but as an individual. So with the inner circle, this isn't an easy decision to make, but it's why the vast majority of people decide to live life of their comfort zone and certainty. By starting to trade, it's almost certain that one of your goals is to create financial abundance and freedom in your life. To do this properly, you will not have the energy for those that don't support the vision. This is natural, and you drift apart from those people. You will feel a sense of inspiration and relief in knowing that only people you have in your life every day are those on a similar path of progression and development in becoming better. It may come as a shock to some of you, realizing that Falcon is more than just trading. Rather, it's a way of life. Falcon provides you with the means to unlock your mind and see your life for what it can truly be. After all, Falcon is a mentality. It's more than just FX education alone. Think about the people in your life. Who supports you? Who is in the position that you aspire to be in? The first step is awareness of who is influencing your decision making, the information you consume. The next is taking action on knowing what is good for your long-term progression. This is why we have built a community of not just incredible traders, but incredible people, inspiring people with bulletproof mindsets. And that's going to naturally rub off on you, which is why having a community to be part of is something not just to be proud of, but to be leveraged for your life in general. Now I want to move on to resources, because there's one thing having the right people around you, but you need the resources to be able to tackle that. So what resources do we have? Well, the biggest resource is the Falcon Slack community. This is your main resource to tap in a worldwide Falcon community and really gives you the opportunity to learn from people who are achieving the things that you desire. With the Slack community, there are various channels such as questions, trade analysis, 90-day plan channel, where you're able to share your goals, ask questions to other traders within the community. We also have the experienced students that we recently launched. These are our successful people in the community, and we're growing that by the day. It's not just about your returns to become an experienced student. It's more so about your returns combined with your mentality. Do you adopt and embody the values of Falcon? Will you go above and beyond and want to help people? Because the more you give, the more you receive. And that is what we embody. And it's something to aspire to be part of, not segregation. And we're constantly growing that and building that and making sure that you have the right mentality to set yourself up for success. Now, within the website, you'll also find a resources section, which is home to downloadable Falcon materials such as spreadsheets, PDF files, handbooks. Utilize these further with your learning and development within the markets. We also have something called the Falcon Knowledge Base, which essentially is a database of all the questions and feedback from the community answered in a consumable way for you to access throughout your journey, giving you the resources you need to succeed. So guys and girls, as you can see, psychology plays such a big part, and it's crucial that you understand these concepts. What I really want to go through now, guys and girls, is let's get into some chart work. Let's actually take a look at all the things that I've covered here. The greed, the fear, all of the psychology in the markets, so you can see the difference between inconsistent traders and successful traders. How do they feel? How do they deal with these situations? Let's take a look at that now. So now let's take a look at psychology on the charts. And what does that look like? Well, most of the time that people struggle is because of greed and fear. Now, there are lots of different things, but these are the two most common things. Well, let's take a look at that on the charts to see how you can avoid those pitfalls and make sure that you're not getting sucked into these emotions that is holding you back from succeeding. So if we look at CAD yen here on the daily chart, we've got this trade that we were looking at. So we've got the double top formation here, and we have this corrective structure leading up to it. So as you can see, we're looking for sell setups in this area. Now, there'll be a lot of fear of missing out leading up to this because it's corrective, it's a really clear structure. You want to bank this profit. Now let's go to the lower time frames. Let's take a look at what that looks like. Well, if you can see here, previously we would have had this structure. Let's see how the fear really starts. So you imagine, let's go back and take that price action. So you imagine you've got this ascending structure and you're looking at this to the downside. You're looking at this high value area, but you have this fear that something may go without you. So essentially, you have this structure. It's moving up, it's getting close to this area of value. You want to look for the sell. And what happens? You have this structure that you didn't evolve and you didn't get involved in this position. So you have this 1, 2, 3 multi-touch. You then adjust this like so. And you didn't get involved in this because price has already moved. So you have this fear that you're not going to be involved in the position. So where does the fear really kick in? Well, you're looking at it at this stage, maybe thinking, well, we may come back up the top and I'll look for a sell. And then it's this part where you can see, right, we're moving out now, or you set an order and you've been tagged in just because you fear, because you didn't get involved in this trade. So this was your plan, essentially, that you had 1, 2, 3, this is within your plan to take the trade. But price is already down here and you fear this is going to keep going. So after we start to break the channel, you either set a market order, which is what we're essentially against, because you fear this is going to go without you. So you just get involved in the trade anyway, rather than waiting for an impulse out and the first correction to confirm this trade. You just get involved because the emotions are taking over you, thinking, well, what if I miss out on X amount, etc. And then what happens after that? We start to play that a little bit, we push up, you take the loss, and now you're thinking more emotional because you're looking at the market thinking, well, I still want to get involved in this trade. I'm not sure when to enter now. As you can see, we just break above this structure and we evolve the pattern so we can look at the channel as a whole. And as you can see now, we're starting to get this overall bigger structure. Let's remove the ray line so you can see what this looks like clearer. So now we're pushing up and we're getting close to these areas. You're looking for the sell, high value area to look to take to the downside, and then what happens? We push lower. So at this stage, you're either getting in with a market order already because you failed to forecast and prep enough to realize that there was an entry within here for a risk entry, or taking it on the break of the tight ascending channel. But now you've got that fear again that, well, what if I don't get this trade and it's already broken? So you get involved in the trade, you're in a market. You're in a market order at this stage. And then price starts to correct. And at this stage, you've got a lot of fear because you're thinking about, well, I took that 1% loss and I need to make this percentage back and more. So what do? When you go to put your stop loss on, you put it on really tight, like so, and you start figuring out what you want to make rather than what is actually relevant. So your mind goes, well, to be honest, I've taken that 1% loss, so even as a minimum if it gets to here, I want to make about 8%, maybe even 9%. Yeah, I'll be happy with that. Then what happens? You previously got tagged in by one of the spikes, and then that little candle took you out for the 1% loss. And then by maybe only 1 or 2 pips, because you're being really, really aggressive because you're focusing on the outcome rather than the process. So at this stage, you're looking at all of this profit, your ego's involved, you want to make the money back because you have this, oh, I don't want to be wrong, and again, so you're involved in the trade, you take the loss, and then guess what? Then it goes without you, essentially. So now you've got all kinds of emotions thinking, well, why did I not get involved in the trade? And now it's where the greed kicks in. The only reason why you've done that is because of greed. You wanted to make X amount and you judged it based off of just having a really tight stop loss, which doesn't help psychologically. So now as we start to play out, there's another potential trade here on the 15-minute once you're slightly more advanced. And because you already got tagged out for the loss, well, already you're going to have the fear of taking this trade. You would have hesitated, so you wouldn't have got involved in this trade because, again, you've taken a 1% loss here, 1% loss here, and you're counting the percentage that you thought you should be up by now. Now, as we go a little bit further, the emotions start to creep in where you're thinking, well, look, enough is enough now. I've lost 1% here, I've lost 1% here, I've missed out on X amount. You're not looking left, and you've probably still got a risk to reward tool on, like so, with your really super tight, irrelevant stop loss, maybe 14 pips, maybe even lower, and then you've got this drag down to here, and you're thinking, yeah, 16%, this is what I should be making, this is what I want to make, and then you ignore, looking left, that we've already filled to the 90% rule, 90% of this correction, pretty much, as you can see. So at this stage, what do we know? Well, if we're at the beginning of the correction, it's more likely to create a much deeper correction, and it's a point where people may be taking a bit of profit, and it gets deeper pullbacks. So you start forcing it around this area and start taking trades within here, then you take another loss, because what do we get? We move back even higher. So at this stage, just confirmation buys. You've decided this is a sell because your risk reward is here, your ego's involved, this has to drop. You took loss, didn't take this trade, fear of missing out, greed, all of these kind of things, and then you start taking silly trades that don't even fit your plan because of the fear of missing out. And your confirmation bias was this has to move to the downside, and then you ignore the signs even when it moves to the upside. And even worse, When this does actually break above, and you can see clearly it's breaking above, you start chasing it from this structure, and you've got entries on here because you still fear this might come back down without you. So it's just about understanding the psychology of why that happens. So can you see how on the charts we can see it? There is the fear, but how do you overcome the fear? What is the solution to all of this? Well, it comes in the form of things like backtesting and forecasting. It's proper preparation. If you backtested and you looked at an impulsive leg like so, if you didn't get the first entry, your mind would naturally be telling you, well, hold on a minute. We know that in an impulsive leg, there's normally X amount of entries, let's say 4 or 5. So if I don't get the first entry, well, I know there's going to be 4 or 5 high quality setups. This has been tested over years and years of data. Well, that comes from backtesting, and it's pure laziness if you haven't backtested. So if you haven't backtested, how on earth can you expect yourself in the moment to not be making these bad emotional decisions if you haven't backtested? It's one thing me telling you that here are the entries in the impulsive leg, but if you've not done the work yourself, you can't shortcut your way to success. If you've not done that and seen that for yourself subconsciously, then you're going to keep making these decisions, and you wonder why you're not getting the results, because you're allowing greed and fear to dictate your emotions, and you're not actually going to the solution, which is backtesting and forecasting, because the more clarity you have, the better decisions you can make. So I hope you can see that on CAD Yen there, of the psychological issues someone can face and how you can overcome that. But it's backtesting and forecasting is going to be an absolute game changer for you. So that's CAD Yen. Let's take a look at another few examples. So now building on CAD Yen with psychological issues, let's take a look at Euro Pound. So here we are on the daily chart, and we're looking at a similar thing that happens quite often. People try to call the tops, and they do it without even really realizing it. So how would that look like? Well, as you can see, that we've got this overall 1, 2, looking for potentially a third touch here. But as we start to rise to these areas, there's a lot of fear of missing out happening in these sections. Why? Because we fear that the market will just go without us, and then we just start getting into trades that are not even in our trading plan too early. Really and truly, it's in the middle of nowhere. It's not really supported by anything based off of how we trade. So let's say, for example, we go to the 1 hour chart and we take a look in a little bit more detail of what that may look like, and maybe you've had this type of experience. Well, if we zoom in here and we take a look at price around, let's take a look at this area. It wouldn't be unusual for us to have a structure like this. We can see it's a very corrective structure. We would be looking for, of course, sell setups. And then we've got a formation like this. But really and truly, this is in the middle of nowhere. This structure is more relevant if we just take price and we move it up higher here. That's a different story. This is a high value area that we can look at for the sell. But in this case, anything around these areas is just fear. The only way this would be justified is if that you had within your plan a 1, 2, 3 touch structure, that you was able to take that trade, manage it more aggressively, and worst case scenario, take a break even if it comes back up. But again, we wouldn't really condone that. But at this stage, just taking it for the sake of taking it is just a fear of not being in the trade. So now as we play a little bit further, we're looking at it, and you're seeing, well, is this a trade that we want to take? Well, at this stage, you're thinking, well, I missed this trade, even though this is just an average setup. I missed this trade. Now I really want to be in the trade because I don't really want to miss out on this trade. This is the psychological problems that people have. So you just take a market order. The same thing, again, ignoring the nature of the market, ignoring where we are within the structure, because you're so zoomed in like this. You just see 1, 2, 3 essentially. If we just neaten that up, you see a 1, 2, 3 of the structure, thinking, missed that trade. Well, I don't really want to lose out on this, and I don't want to miss out on all this trade, so let's get involved in the position, rather than asking yourself a better question and saying, well, if I didn't get this trade, what am I waiting for? Waiting for the first impulse and the next flag. You're not even waiting for the flag to take the trade, because the fear is kicking in that you want to be involved in this trade. You size it up, you think about getting involved in a position, and then what happens? Let's zoom out. You take a look at where we are. We're in the middle of nowhere, and as we play, we then start to form and we move back into the structure. So at this stage, this is where you really start to force it. So we adjust our structure. You then have all kinds of fear at this stage, likely maybe even trying to get in there again from the same issue. You're not waiting for any solid flag. You're just getting involved. At this stage, a lot of emotions will be occurring because, of course, we've pushed down and now we're starting to form a bit of a bigger structure. So at this stage, we can see that we've just broken above the top. Now, really and truly, if we just evolve this structure, what actually happened within the markets? We broke lower and we formed the descending structure, and then we pushed higher. This is the higher value area that we're looking at, but you've already had the fear of missing out, taking a loss, and you're just chasing a trade that really and truly wasn't even in your plan. You just had that fear that you wanted to be involved in the trade. But now what happens? It breaks above, and what is your thought process? Well, trade's off now. I'll go and do something else. Why? Because you don't really want to face it. You're almost looking at the chart thinking, well, I don't really want to deal with those emotions. I had a loss, maybe a couple of losses that weren't even in my plan. I don't even know why I'd done that. All these kind of emotions. Then you see it break to the upside and think, well, trade's off now. I'll leave that alone. You remove it from your watch list because you don't want to look at it. And then how we actually progress, we zoom out, we start to see a bit of structure, and then we start to form a bigger pattern. So this is where we want to pay attention to it the most, because we're expecting this is even better for us, because the more structure that we have, the better we can actually make these decisions. And when you look at the overall structure of what we have moving to the upside, this is where people will rule it out, not realizing that we want this to happen. Think about mass psychology. Think about how this ascending structure is getting people caught on the wrong side of the market. But imagine you've removed this from your watch list, ignoring the fact that you was happy to take trades in the middle of nowhere around here just because of the fear. But we have this 1, 2, 3 that's just broken above this structure, bearing in mind looking left even further and seeing that we have this other significant high, like so, that we've just broken above to look for the downside. The trade's not off, you was just a bit early, and you had no real plan. You took it in no man's land. And then going back to the 1 hour chart, you've essentially missed out on the position at this stage, and then you start chasing it a little bit further, and then we start to form the correction, and some of you would have been in from these areas. It starts to move down, and now let's take a look at what happened in this area. So as we see how the big move played out to the downside, you can see if you're getting into these trades, it's just going to cause unnecessary losses and psychological issues. And this is where this fear comes from. And again, it just comes from a lack of planning, not asking the right questions. I mean, even in this area, how would you have avoided it? Just ask good questions. Is this trade in my plan? Nope. Already that just gets rid of the trade that you shouldn't take it. And then you can look left and say, is this trade supported by any outer structure? No. So you're almost ticking your nose already to talk yourself out of the trade, because this is not a trade you want to talk yourself into, because it has no substance to it whatsoever, and this is not going to be in your go-to setups that you take consistently or on larger capital. And what happens? Because you've experienced so much fear and loss, you end up ignoring this, and then by the time you look at the trade again, price is already down here, and you're thinking, why did I not look at that? You know, I had a 1, 2, 3. I could have got involved here. You start counting the percentages. You look at this correction, smaller corrections, larger flags, and you see the amount of opportunity. Price has moved all the way down here at this stage. You then actually take a look at it and think, well, do you know what? There's a bigger picture here. There's still more room for me to go. I think that we can get all the way to these lows. The ego starts getting involved. You ignore the signs, and then you start forcing positions around this area where we're quite far into the run and we haven't had a larger correction yet, and you start taking trades around here, you force it, and then guess what? It pulls back. You ignore the signs again, and then we get the drop again. This is a cycle that just gets repeated over and over again. But where does the root of it all come to? It's just a lack of planning, not doing the back testing and not doing the desired work. Again, it just goes back to processes. If you focused on the processes, you would get the outcome as a side effect. If you focus on the outcome, which is what most people are doing that are not succeeding, then you're going to have all of these psychological issues with fear of missing out, greed, and all other kinds of emotions. So I hope you can actually see that on the chart. It's very obvious for us as an experienced trader to be able to see this on the chart and see how it plays out. And now that that is aware to you, you can have the self-awareness to say, hold on a minute, I actually do that. How can I avoid doing that? Better questions, trading plan, putting in the work. It really is that simple. So that's euro pound. Let's take a look at one more example for a buy. So now let's take a look at it from a buying perspective. So here we have Kiwi CAD, and we've been looking at this particular channel here. So it's important to understand the bigger picture here. So we're looking at a longer term picture of a move to the downside. But with the move to the downside, there was also a possibility within the structure that we may get a rapid reverse and test this area again for a third touch. So being aware of this corrective structure moving to the downside, this is where, again, a lot of fear is coming in, but this time the fear of being wrong. So what does that look like? Well, essentially, a lot of reasons for the trade, we break these lows correctively. So we have a possibility that we could push back into this area and move to the downside. So looking at it from this perspective, let's zoom in. So on the 1 hour chart, it's almost like trying to catch a falling knife at this stage. So what will happen is you will either, two things really. Firstly, try and get involved in this position around here, like so. And you have fear of not taking this type of trade because it can just keep trickling and trickling. So you don't really want to get involved in here, even though we've got a few touches, nothing too crazy. And if we just adjust that ever so slightly, at this point, it just broke. So 1, 2, 3, it just breaks correctively. But you don't want to get involved in here, and I understand, because it feels like trying to catch a falling knife, which it has an element of that. So your plan says, wait for the first impulse and take the first correction, because there's confirmation. But you don't take that first flag. Why is that? Because of the fear of being wrong. The same fear of not getting involved in this original trade, which is a good thing, because it's within your plan not to take these trades and wait for the first correction. You now don't want to be wrong, because you think you could be tagged in and tagged out, and you're almost talking yourself out of a trade. But really and truly, you've had a break of the descending structure, you have your first impulse, you've got your first correction, and then you've got the push up. And then you see the move go without you, bearing in mind it just fit your plan, but it's the fear of being wrong that sabotages you, and that is when the ego comes involved. And that's when you know you're not thinking in probabilities. Because remember, the market doesn't care whether you're right or wrong. It doesn't mean anything to do with that. It's a game of probabilities. And understanding true psychology is the ability to accept that you could take the highest criteria of quality trade and it still not play out. Why? Because we're playing probabilities. You take it 10 times and it plays out 8 times out of 10. You're not going to worry about the two trades that you took for 2 losses and then the 8 wins that you took. So it's about understanding psychology can come in all different types of forms. But if you can combine what you've learned from here, what you've learned from CAD Yen, what you've learned from Euro Pound, combining the mass psychology and the overall fear, greed in the market, recognizing these psychological problems, you can actually refine that and go back and see those patterns. This is why when people take losses, they don't even journal them. And if you look at the previous episodes, it's going through the self-refinement, looking at the ASR, asking those good questions about, right, what lessons did I learn? Why did I take this trade? You start asking those questions, you'll realize a pattern. And that's why you have to go back, refine it, so then you can rectify it moving forward. And it's only a matter of time, if you do that work, that you'll stop making these mistakes, and then you'll start asking yourself better questions. So have good checklists. Ask yourself, is this trade within my plan? Yes. Remember previously on the other trade, asking yourself, is this trade in my plan on Euro Pound? No, it's not. It really does come down to asking yourself good questions, doing the back testing, doing the forecasting, and ultimately just putting in the work. So again, I highly recommend that you go over these 3 examples again, because each and every time you're going to take away a different golden nugget that's going to give you that aha moment, so you can start getting more into that psychological framework to set yourself up for success within the markets. Right, guys and girls, so as you can see, psychology is such a big part of trading, and I wanted to take this opportunity to really speak to you just a little bit about just psychology as a whole. I think it's really, really important that when we're thinking about psychology, to understand, we've all heard the saying, right, 90% psychology, 10% technical. Well, let's think about that for a second. Most of people's psychological issues, they really come from not understanding the technicals, because you can't have one without the other. You still need to be technically skilled, because let's take a look at things like FOMO, fear of missing out. We hear about that all the time, right? A lot of people think that it's my psychology that I need to work on, so I need to tackle that. So let's just focus on psychology. And they underestimate how much work that they need to put in on a technical standpoint first to really understand what they're doing. Think of it like this. If you back tested, if you actually put in the work, and then you saw the magnitude of opportunity within the market, within the Falcon strategy, would you then have FOMO? Probably not, because you'll see how many opportunities there are, because FOMO really just does come from a lack of clarity, and the lack of clarity just comes from you just haven't done the work yet, or you're still very early on in the process. You might think, well, I've done a bit of back testing, I've done some work, and I've still got FOMO. The subconscious mind loves repetition. It takes a bit of time. So sometimes the root of fixing your psychology actually does come from just go and do some back testing and go and do some specific back testing. So going into things like top and the bottom of the structure, actually looking at impulsive legs and realizing, well, how about I back test that part? That's going to help me so much more. And then that fixes your psychology as a side effect, because you realize, wow, look at all these opportunities. Fear of missing out doesn't really exist with this strategy because I've got so many high quality trades. If one trade goes and then I'm not involved in it, it doesn't really matter. Then this leads on to the second point, which is fear of being wrong. Fear of being wrong is a huge thing, and I've suffered with this for years and years within my trading because I constantly wanted to be right all the time. And this is where my ego was involved. And the reason why I had this fear of being wrong was because I wanted to feel like I was invincible, and I was looking at the markets in the wrong kind of way. It was can I be right all the time as much as possible? But you've got to remember, as a trader, you have to think in probabilities, and this comes with developing a probabilistic mindset. So really, the root of fixing fear of being wrong comes from truly understanding probabilities. And I'm going to give you some material at the end of this episode so you can understand how to really, really tackle that. But can you see that? Fear of being wrong. How do we tackle it? We work on probabilities. And we've got episode 4 for that as well. But really hone in on learning how to have that probabilistic mindset, because that is what is going to set you up for success as a trader. And this kind of leads in nicely to hesitation. Where does hesitation come from? Most people will hesitate because, again, probabilities. They will take a loss and then they will hesitate on the next trade. Why? Because they're not thinking about trade frequency. They're not thinking about that we don't know our sequence of our wins and losses. They're just thinking, well, I'm hesitating because I've taken a loss and I've got that fear again. So can you see how the probabilistic mindset, you're going to be far more beneficial by focusing on how to develop that probabilistic edge and mind frame, and then fear of being wrong, that will reduce. Learning how to backtest and seeing the opportunities, fear of missing out, it will reduce. It's not about eliminating it, and you're not just going to get psychology straight away, and you're going to realize that the technical standpoint, you can teach technicals fairly quickly. And I don't mean overnight, but over a 3-month period to 6-month period, you're going to know a lot about the technicals. And of course, we're always refining and making tweaks and things like that. But the psychology part, that's ongoing. And I'll give you an example. You know, when you're first starting learning to trade, what happens if you have kids, for example? You might start off and actually be a good trader, be quite accurate, take quite a lot of trades, and then you have kids, and then you have to utilize your time a little bit more. You might even develop, as you get older, into more of a longer term holds play, which you can see in episode 3 or 4 in Quick Tips. No, it's Quick Tips season 3. If you check out our longer term holds, that's a slightly different approach to the market. So you see how your psychology of even how you trade will develop. And this is why psychology is such a big part of trading, because it develops with you as an individual and as a person. But the technicals, yes, they will make the tweaks, but the psychology part is ongoing, which is why we always give you the tools and the strategies so you can stay congruent with that and keep developing. And what it really comes down to is everything that I'm speaking about here is really a process. It literally comes down to a process. And it's like not having a plan. Think about one of the main reasons why people struggle is because they don't have a trading plan. It's almost like, imagine going into the gym and not having a plan and just picking random exercises and saying, yep, I'm going to do shoulders, chest, a bit of legs, and you're just picking random machines and just doing random exercises. You might get some results. You might, because you're actually doing something, you're going through the motions, you're doing the exercises. Will you get optimal results? Probably not. Even take that one step further. It's like tracking your macros. You might you might think you're eating well and that you're technically eating good, nutritious food, but you might need to hit, let's say, 2,000 calories for your macros, but you're eating 3,000 calories. So you're overeating and wondering why you're not losing weight. It's the same with the trading plan. You might be trading well, but you might be taking too many trades. So if you don't have a plan, you'll overeat, and if you don't have a plan, you'll overtrade. So you see how all of these psychological issues, they really do come down to having a good process, and as a side effect, you'll fix a lot of these things that you're probably overthinking and, magnifying in your mind that they don't need to be. But a lot of these things do come down to having a great process, and as a side effect, it just subsides. So there is no attractive answer to it. Psychology is not this one thing that you just suddenly get it and now you understand trading psychology. There's life psychology, mind psychology. And this is why I'm going to give you some material that's going to work on that as well. So just understand, I really want you to revisit this episode and fully grasp the fact that it takes time to develop a very, very strong, consistent mind. but your mind has to scale before your account scales. And this is tried and true with the whole real overall with trading. I think it's the most important thing. If you don't have the right mindset and you're not working on things that help you scale, it's very, very difficult to actually combine everything that you need to do. And this is why the psychological issues, they just keep coming up over and over again. So guys and girls, really, really treat the psychology with utmost importance. I would even go as far as saying it's probably more than 90%. It's one of the biggest parts, but that doesn't mean that you shouldn't be a highly skilled trader. But we need them both to be congruent. And I'm confident with these strategies, all the tools, everything that we're doing on a weekly basis, you're going to have everything to be able to develop a great mindset. But guys and girls, now I want to get into a bit of reading material, some practical steps, things that I think that's going to really, really help you work on your mindset as well. So let's get into the reading material first. So first book, of course, is Trading in the Zone. Some of you may have read that, and if you've only read it once, I highly recommend that you read it as many times as possible. But I want to give you something very, very specific that I've recommended to the community time and time again, very, very important. So page 101, if you just go straight to that, is thinking in probabilities. Now, I spoke about earlier with trading psychology, it's very, very important that we develop that probabilistic mindset. Now, you have to understand probabilities. You can't just read Trading in the Zone once and think, yeah, I understand, trading psychology as a whole. It takes time. The subconscious loves repetition. Don't underestimate that. So what I highly recommend that you do is that go over chapter 7, go over the whole book, but specifically go over chapter 7 and really study chapter 7. Just take as many notes as possible. Do the 3-step process on chapter 7 alone, and you'll be astounded as how that shift in your mind, because something different happens when you really start to develop that probabilistic mindset. The way you feel and think about losses and wins, it starts to change. It's not something I can entirely explain just in one thing, but you start to experience it. And anyone that's developed consistency understand what that means. But it doesn't happen overnight. But the one thing that you can do yourself the biggest favor, commit to a goal to do the 3-step process on chapter 7, and slowly it starts to ingrain into your mind and you'll fully understand probability. So I highly recommend go and revisit this book if you haven't read it already. And if you're brand new to Forex, then definitely get Trading in the Zone. You can get it on Audible as well, so you can download it if you prefer listening. But going over that chapter, it will do yourself the biggest favor. So that is Trading in the Zone. Now I want to take you through another reading material that I think is going to be hugely beneficial. It's been beneficial to my life as well. So next book that I want to recommend to you is The Chimp Paradox. So I'm a huge advocate of this book, and I've read this countless times, and I'll continue to do that. I'm a big believer in going deeper into the content rather than just reading lots of books for the sake of it. This has been an absolute game changer for my life, and this with Trading in the Zone, I believe, are one of the two of the best books that you can read in trading. And the reason as to why is that Trading in the Zone really does cover that psychology, but what this does is it really tackles the mind management. And with the chimp paradox, when you learn how to manage your chimp and you figure out, when you're thinking emotionally, there's so many key things that you can go into this. I would study this as much as possible. Trading in the Zone and this book, congruent together, they're huge for your trading. So I would highly recommend that you do that, because it's about mind management, right? It's not about, you can't just understand trading psychology, because there's life psychology as well. You need to know how to manage your mind through all different processes. If you're stuck in traffic for 7 hours and then you go on the charts, if you're not learning how to manage your mind, how do you think you're going to react? You're not going to trade off of a plan. You're going to trade off of emotion, off your gut feeling, rather than having a process. So there's so many things that this book has completely changed my life. So I highly recommend that you read these 2 books, study these more than anything else, and I promise you it's going to be an absolute game changer for you. Now, I'm sure there's other books that you can read as well. There's so many great books, but for these 2, especially if you're just starting off into Forex, these 2 will help you out a absolute ton. So guys and girls, dig into these as much as possible. Last thing I want to take you through is something that I believe that's going to be very, very beneficial, that you can download, something you can track as well. So we'll get into that just now. Right, guys and girls, so now I want to leave you with one last thing that is going to be very beneficial, practical, that you can take away and download in the resources section. This is the Emotional Language Journal. So why is this important to you? How's it going to help you as a trader? Well, we need to be tracking this. We need to be tracking our inner dialogue and understand and bring to our awareness how we talk to ourselves. Because this is such a big part in trading, and it's self-sabotage, emotional language, and a lot of us don't realize how negative we can be. So how we fix it is we bring it to our awareness. So definitely download this, make sure that you print it out and you're actually filling it out and you're going through the process so you can track that and see those patterns within your language. I mean, when we think about it from a scientific level, the subconscious mind is a very, very powerful thing. It's pretty much 95% of what we do. And if we don't know how we're thinking and our thoughts, how can we actually think that we're going to be successful if we're not managing that? And if we think about it, we have on average, the average human has about 75,000 thoughts per day. 75,000. 90% of those thoughts will be exactly the same the next day. So you imagine you're being negative all the time and you're kind of muttering under your breath, you're always thinking, oh, what happened to this? What happened to the pound pairs? Or why did that take me out? And you develop these kind of negative connotations towards the market and you don't realize you're even doing it. How are you going to track that? So it's all about bringing it to your awareness, and this emotional language journal will help you out massively. And this is something you actually can do for people to be able to track it and give you the advice that you need, because once we can see the patterns in your emotional language, we can fix the root of the problem and then you can move forward. Otherwise, you go through the same cycle over and over again. So I highly recommend that you go through the language journal and actually treat this as just another key process that's going to help you out massively. So congratulations, guys and girls, we're at the end of episode 9. As you can see how important psychology really is. And hopefully you've seen where maybe you've already been going wrong, why entering trades really, really late due to the fear of missing out. And if you can really understand that the root of all of this psychology normally comes back to things like not having the clarity. And if you don't have the clarity, what do you need to do to fix it? Go to back testing. Remember, fear of missing out, all of these psychological things that people struggle with normally comes down to just not putting in enough work. And if you can do that, you're setting yourself up for success within the markets. Now, what I really want you to take away from this at the end is really utilize the language journal. So download that, print it out and track it. Remember, 90% of your issues can be figured out if you do that process, because you're going to see patterns within your own language. Once we know what they are, we can fix them, we can move forward, and you're going to save yourself so much time.